we make this joke all the time. That's just a timer. Maybe we'll take a break. Maybe we won't. We haven't been lately.
Depends on how we feel.
So, you guys ready to rock?
Yep.
All right. Don't sound so enthusiastic about it.
Yeah.
Brian and Adriana. I say that right? Yeah. Thanks for
Adriana.
Adriana.
What the fuck?
Yeah.
Nick, cut this out. We're going to start again.
Fuck that. We're starting over.
So you never know. Is it Adriana? Is it Adriana?
It's fine.
It's like no matter which way you slice it, you're wrong. So anyway.
It's not like tomato and tomato.
No, because nobody says tomato.
Assholes.
You,
say tomato. No,
I don't
that.
say tomato.
I don't say tomato either.
Anyway, so we have Brian and Adriana on. See, now I'm tapping
Good
the
job.
table.
Yeah.
Brian and Adriana, thanks for joining us today. We'll go into some intros here in a minute. We just love to hear a little bit more about your background. And seriously, like we'll edit a bunch of stuff out. So like, just have fun. We'll ask you guys a handful of questions and just shoot the shit essentially for the next hour and a half and try and cut it down to an hour's worth of dialogue. So cool.
Cool.
Let's fucking go.
All right.
Let's go.
All right. So
What was that?
that was a Sonos speaker
Oh.
that may or may not have just connected to my phone via Bluetooth.
Oh, cool.
Yeah.
All right. Let's start over.
Wi-Fi.
Wi-Fi.
The Wi-Fi.
Sonos is Wi-Fi.
Well, that one behind you, my friend, is Wi-Fi and Bluetooth. It's the Sonos Move. Retails for $4.99. Rechargeable.
Wow.
At Best Buy?
IPF 67 waterproof. You can take it to the beach.
I have one.
So it's worth it.
It's pretty awesome.
I went
yeah.
down a big wormhole looking at like Sonos or
Big Sonos snob.
what's the one out in Framingham? Bose.
Bose.
Yeah.
Mm.
Yeah, go Sonos.
Spent way too much time looking at it.
Yeah.
We have Sonos.
I have so back in my retail days, I still get some old Sonos Connects. So sometimes tail end of the year, 60-70% off comes around.
Oh, I need a couple new bridges.
They don't even make those anymore.
Oh, what's the new one? The amp.
Oh, you need the Sonos
I need to
power
do
some
the
speakers.
ones that do with the speakers in the ceiling.
Yeah.
And I need different zones.
Yeah.
Yeah.
I can give you a tech consult afterward.
All right.
Man
thank
of
you.
many
Thank
talents here.
All right, good. So
See,
we got
what
our
happens.
friends Adriana and Brian with us today. Today we're going to talk about commercial real estate. Both are deep in the lending world on the commercial side. So we're going to start with Brian. Brian is with Finance Boston. And if I understand this correctly, does... why don't you tell us
Stuff.
what you do?
He does stuff with
He
money.
does stuff. He's like the guy, and he knows more than anybody I've ever met about every parcel in the greater Boston area that is remotely commercial. So, Brian, tell us a little bit about yourself.
So yeah, we're commercial mortgage brokers.
What does that mean?
So we source debt and equity for real estate developers and investors. Our bread and butter is debt. So if someone is looking for a commercial mortgage, anywhere from pretty much 1 to 50 mil, but our sweet spot is in that 2 to 20 range. We'll package up a deal.
It's a big
underwrite
range.
it. Yeah, it's a big range, but like I'll go into reasons why we stick in that range. So we'll package up a deal the same way a bank would, and we'll shop it out to 10, 15, 20 banks, and our lending partners, we know who's lending what at what point in time. We'll come back to the borrower with term sheets and take it from there. So that's kind of part of what we do. And then the last 5 years, we've really grown the equity arm. So our bread and butter is in debt, but we also raise equity.
We believe in debt, too.
I'm in a ton of debt personally, so it's
That's
great.
good.
It's great. Good debt, mostly good debt, at least. A lot of mortgage debt.
So we found like debt can solve 8 out of 10, 9 out of 10 problems, but occasionally you'll have a client who has a deal too big for them, or their balance sheet can't get it done, or they even have more capital than they have deals, so they'll want to invest in other people's deals. So we added equity in the last 5 years, and that's been great. It kind of distinguishes us from our competitors. So joint venture, limited partner, general partner type equity, it can be cut up a million different ways.
Cool. We're going to come back to you in a minute
Yeah, I
and
wanna
ask some more behind the guy questions, but we're going to flip over to Adriana quickly.
I already have so many equity questions.
Yeah.
I can't wait to ask you.
So Adriana, you're a commercial lender as well at a local bank here in the Boston area.
Yes.
Yeah, tell us a little bit about what you do.
So right now I manage a team of commercial lenders in the Boston area, South Shore, pretty much all over Mass. And we source new deals. We work kind of on commercial real estate, then with business owners as well to create financial efficiencies and provide working capital. So we have our hands in a little bit of everything. I grew up in banking. I started off as a part-time teller and kind of worked my way up, and to here I am.
A real success story.
Yeah.
From branch to boss lady.
Yeah.
All right. Cool. So Brian, I hear a little bit of an accent. So you give us the story of how you ended up in Boston hawking commercial loans.
Yeah. So I came over here. There's a visa called the J1 visa,
Yeah.
which is basically for students in Ireland to come over for 3 or 4 months during the summer. So I done that 2009, and I graduated college 2009. So I went home.
So you're from Ireland.
From Ireland, sorry,
Okay.
I should have said that.
Yeah.
But came over 2009.
We figured that one out. Thanks, brother.
I mean, I know him, so I know the story.
Was working construction the summer 2009. Had a great time. 19 of us living in a 4-bed and all. And it was great fun.
Rent was still $1,000 a person.
Yeah, didn't get that security deposit. Funny story. It's one of Anwar apartments actually. Yeah.
What is it again?
It was one of Anwar's apartments.
Oh, really?
Yeah.
That's too funny.
But yeah, so came over summer 2009. Went back home, graduated, and Ireland's recession was a little bit behind the US. You guys fucked it up for everyone else, and
Right.
then the rest of the world.
You're
Usually how it goes.
You're
right?
welcome.
Yeah, thanks
Yeah.
so much. So
Once again in the debt ceiling again today.
yeah,
So
I graduated 2009, went looking for jobs, and my degree was in accounting. So that's even worse because the accounting industry feels it a year later. So like right now, accountants having a great time because they're banking
Yeah.
everything from last year. That industry feels it a year later. So I came back out here on another visa. Got a job for a year with a friend, nothing in real estate. Went back to Ireland, graduated. Went back to Ireland, done a master's. Graduated that master's, then came back out here in 2013, and that's when I entered the kind of real estate finance world.
great time to get in.
Yeah, 2013 was a lot of fun. I didn't have any background in it. I just got hooked up with the owner of the company, Fergal Woods. Took me under his wing as an analyst. That's how we start. We all underwrite deals. Kind of, you're a spreadsheet monkey for the first 2 years. Then
You must have much better spreadsheets than I do.
we do and we don't. So like
We should trade them sometime.
I've seen.
That. I mean, just give me your spreadsheets.
I'll give it but
And then fill them out for me.
Yeah, and then also we'll take some debt and equity too.
the best thing about spreadsheets is keep them simple.
Yeah, fair enough.
All these people overcomplicate, do
Yeah.
10 year cash flows and all this
I don't even know how to calculate
trended
that.
rents and all this, and it's like you got to think of your end user on a spreadsheet.
Yeah.
So if you're sending it to a bank who's you're the exception, but like a lot of bankers are like 6-year-old white guys, and you send them a complicated spreadsheet and they're just
You want a PDF.
rather than them admit that I don't understand it, they just won't reply. They'll be like,
Yeah.
oh yeah, not
Looks
for,
good.
looks good, not for me.
We'll do it.
So yeah,
So confuse the old banker is a good strategy for underwriting
make
deals.
it-
No, it's a
Opposite.
bad strategy. They won't look at
Yeah,
it.
they won't look at it. Just
Yeah.
keep it very simple. But yeah, so that was 2013. Back then it was just my boss and I, and then since then we've grown. There's 8 of us here in Boston.
Awesome.
4 years ago we opened the company Finance Miami, so just a
Oh,
Miami
very cool.
version of what we do. And we've got 2 full-time guys down in South Florida doing that. Pretty much the same as what we do. Bread and butter is debt and equity. Miami's a total different world. It may as well be a
Right.
different country than here. The way
Actually, it
they
might
lend.
be.
Might be, yeah.
Yeah.
But
They
yeah,
have different building standards down there.
Very. And all the doors open out, which I think is so weird. Like I was watching something
does that
last
mean?
night. Like instead of how in our houses the doors open in, like when you walk in
Yeah.
your front door, you push it open and it opens into the house.
Yeah.
In Miami, you got to pull it. In Florida, you got to pull your door open. They open out. So the water, if it floods, you've never
I didn't
seen
know
that. Yeah.
Is this real?
I don't know. I was watching like House Hunters in fucking Boca Raton last night, and all the doors were opening out.
I don't know, man. I don't know if that's the
I have
truth.
to do some research after.
Yeah,
Yeah.
we're gonna have to. We're
Yeah,
gonna
we're
have to
gonna
do it. Yeah, but anyhow,
I was thinking of a show because I was gonna try and crack a joke.
yeah,
What's that show with that?
Golden Girls.
No, it's like they're all.
I
big
watched that last
I don't-
night, too.
I don't know why I can't remember the name of the show. It doesn't matter because the joke's not funny anymore. I missed its moment. It's gonna come back to me.
It's all good. About 45 minutes in, he'll start laughing and
I
come
will.
up with something else.
Yeah, and I'll try and reincarnate the joke. Maybe we can see if Nick can edit the joke back into the end.
Splice
and
it
we'll
in
laugh.
a good spot.
Yeah, good.
Um,
That's awesome though. Finance Miami.
yeah,
yeah, and then so yeah,
See how I reeled that back in? That's good.
I was proud.
So yeah, that's doing well. Boston's doing well. We've got a serious team here now. We're growing. We're probably going to hire a few more people this year. But yeah, that's kind of my background.
Awesome.
Cool. And you had some big milestones in the last couple of years, right? Like you.
Yeah, like originally I was only like any kid in their 20s, came over here, have a good time, and then that turns into 4 or 5 years, get a girlfriend, get engaged, get married, have kids, buy a house, just write a will, like just
Very important part of it.
Yeah.
Life insurance is next. If you don't got it already, we'll hook you up with Martin.
No, I got it.
Yeah, of course you do. Good.
It's the right thing to do.
It is the right thing to do.
Now, Adriana, tell us a little bit about you. So you said you started out in the branch and you've ended up where you are. So what does that progression look like? How did you get there?
So I started off as a part-time teller in college. Someone said, hey, you want a job at a bank? Paying good? I said, sure. Why not? Never thought I would.
Where'd you grow up?
Chelsea.
Chelsea. Okay, that's what I thought.
Yep. Catholic school my whole life. So
Did you go to LLA in Chelsea?
Yeah, no, I went to OLG.
Oh, my mother was a teacher there like
No
in
way.
the 80s for like a year.
She would have hated me. I was a terrible student,
Oh.
unfortunately.
So was I.
But
Still am.
same. So I grew to love it. I started off as a teller and then quickly I grew up playing sports, so quickly liked the team atmosphere of it and then the sales aspect. I'm very competitive. So then I got promoted to sales. Then through that, pretty much did every position within retail banking. So customer service, teller manager, assistant manager, branch manager. So it was usually the youngest always. So I always had people that I was managing that were a lot older than me. And then recently, well, not recently, it's been a couple of years now, I transitioned to more business development, business lending, commercial lending. I always loved real estate and I wanted to kind of get my hands into it. I was very involved in the community, so it was just like a nice segue.
And you and I are on the board of the Boys and
Yes.
Girls Club of Lynn together.
Yep.
Yeah.
I sit in a couple other boards as well, mentor a lot. So
You're on the board of E4All still or
I'm
no?
not.
No.
I'm a mentor.
You're a mentor. What other boards are you on?
I'm on the board for Leo, so Lynn Economic Opportunity, and on the board for the Next Gen with you as well.
Oh, yeah.
So
The Essex County Community
Yes, that's what it's
Foundation. Yeah.
I feel like are you on a board?
No.
I feel like I should be on a board.
Oh, I'm on the Boys and Girls Club with Adriana, Essex County Community Foundation Next Gen Committee. I'm on the Professional Advisors Committee at the ECCF. I'm on the board of the Lynn Home for the Elderly. I'm on GLIS, Greater Lynn Senior Services. I'm on the board there. I may have been just invited to another board. Life Scene. I'm on the board of Life Scene.
Can you give them the link to our podcast and off our listener count?
Yeah, I mean, just the board members alone we'd be in the hundreds.
Yeah, jeez. That sounds like a lot of time commitment. I was on a condo board once. It was terrible. I get a lot.
It was
of good
terrible
stories.
for all of us.
Yeah.
I remember text messages from the meetings being like, "Can you look at this?"
Yeah.
Yeah. I'm glad you're off that board.
Yeah. Me too. Anywho, enough
So
boards.
community involvement,
Community involvement.
got into commercial lending, and now you're just crushing commercial lending.
yeah, then I went to an individual producer because I naturally,
Mm-hmm.
and then I missed the aspect of having a team and kind of that coaching atmosphere. So recently, just got promoted. So now I have 9 commercial lenders under me.
Awesome.
Get an override.
Yes.
Oh, we love overrides.
We do love overrides.
So the youngest SVP in my company,
You want an
which is
override?
kind of
What's an
cool.
override?
We get to share other people's commissions.
She gets probably a couple bips on all the deals. Maybe 20 or 30, maybe 45. Who knows?
Yeah. So
It could be sweet.
Helps you buy more Gucci.
Yeah, helps me shop. I should buy real estate, so we'll talk after.
You're gonna have
I
to.
need some help.
Probably the next time, the last.
But you
time.
have a multi, don't you?
No,
No?
Not
Did
yet.
you used to?
no,
No.
I have a single.
Okay.
Messing up.
That's why I'm gonna call you.
This guy's messing
House
up.
hack.
Yeah.
She's gonna house hack.
Listen, I
house hack.
think personally, real estate is gonna be on sale for the next, depending on what happens with this whole debt ceiling thing we were shooting the shit about earlier, which I'm sure will be fine in a not really fine, but a fine way. This is the last time it's gonna be on sale for a while. That's my professional opinion. Any takes from you guys? What do you guys think?
I haven't. So I've seen a little bit of a slowdown. I haven't seen too much.
I feel
in
like
terms of-
commercial stays a little bit more
Yeah.
insulated. Business probably hurting. Probably so you need some more. You get some more activity.
Yeah, so I think we really had to pivot during the pandemic from a business lending standpoint because everybody was coming to us and say, we have to close our doors. We can't pay our employees. What do we do?
Were you guys doing PPP?
Yes, I did. That was like a nightmare. That's
that's
like
what
a
it sounded
terrible words to say.
P3 is that better?
Yeah. But yeah, we did a lot of PPP, which is great because obviously it put
Helped
the money
out a lot,
back.
yeah.
Saved
It
the
helped
economy.
everybody. It did,
Yeah.
absolutely. I think now,
Did you get paid for that?
no.
No commission
Oh,
on PPP?
just the kindness of my heart.
Oh,
That's kind of
God
messed up.
bless you.
I think a lot came after it of
Yeah.
networking because a lot of other banks,
Relationships.
a lot of other
Yeah,
banks
that's a
weren't
good call.
answering
Yeah.
answering the phone, and I was answering. So they were coming to me. Like last year, I probably had one of my best years sales wise.
I heard a lot about how the bigger banks, the Bank of Americas of
Mm-hmm.
the world, it was really, really tough to even get an answer from anybody. So I remember we were talking to Joe Shenatico.
Yeah.
You know him, right?
Sound 5.
Yeah. And I just remember,
For a couple more days.
Yeah, I heard.
where's he going?
Biggest secret in Lynn we don't know yet.
Yeah, he didn't tell me either.
Yeah.
I tried to get him to
Yeah.
crack it. It's
We're-
a promotion.
Yeah.
Well deserved. Well deserved.
Going to run retail banking somewhere.
That's
We
what
just
I
don't
got.
know where.
Likely not with Salem 5.
Likely not with Salem 5 since his last day at Salem 5 is Tuesday.
Well, holy shit.
Yeah. We'll have him
Breaking
on the pod.
news.
Joe,
Yeah.
get your calendar open.
Well,
We'll be calling.
I just remember, he's a good dude.
He's a good
I
dude.
remember him talking to me about how even when PPP started to tail off, they were still doing the loans. They were still getting small business owners money that these bigger banks shut off essentially. And so the amount of people that probably flocked to small banking, that's a new word, that flocked to small banking to hook up with local bankers again, like the old times, you know, they really helped the community. So that's really cool. That's a really cool thing to hear, that you get to network with a lot of those business owners. It probably resulted in a lot of ancillary business, you're saying.
Yeah, it was
that's
cool
awesome.
too because a lot of the banks came together. Like I remember talking to Joe, and he'd be like, "I can't do this one. Can you do this one?"
That's
Just
awesome.
to help, you know. And
So
at the
cool.
time, I was managing 500 clients, so the first thing is let me call my banker. Like, what's going on? Help me.
Yeah.
And then people that I haven't talked to in years, like, you work at a bank? What's up at PPP? Help me. So it was a very interesting time.
Crazy.
And what are you seeing out there in the world, Brian?
We're not seeing much distress, not right now. And I don't know what that's been propped up by, but people are still buying at these 6% rates.
Yeah.
Now they're not paying probably what they were 6 months ago, but it's still not enough to justify the increase in rates. On the commercial side, I think for the next 2 years we're going to see a steep decline in production of condos and single families.
Yeah.
Anything being built now is going to be multifam.
Oh, really?
yeah.
Okay.
Why?
Yeah.
Debt, just driven by debt.
Not political climate, debt.
No.
Because I have strong opinions on political climate
So-
of multifamily development at the moment.
So tell me, when you say debt, like tell the average listener, like what the hell are we talking about? Like why is that the decision for people to build multifamily over development? Like talk more about that.
So most condo projects are going to be priced off prime, the Wall Street Journal prime rate, which is currently 7.5%.
Yeah.
So if you're floating over that 50 bips, 150,
Takes too long.
you're in the
Lead-
8 to 9% range. So that
leads you up.
cost of capital's
Plus cost of construction.
cost of construction's high. Even just the risk of what if the rates stay at 6? Is my seller?
What if the market comes down?
But rentals are pretty resilient.
True.
Worst case scenario, you lenders like to call it blend and extend. So like just you don't hit your
What does that mean?
So let's say you don't hit your debt service, you don't hit your you don't hit your rents. Rather than convert to P&I, the bank will keep it interest only for another year. And then bankers love multifam. The main reason being, if you originate a $20 million multifam loan for a 5 or 7 year, it'll probably stay in your books 5 or 7 years. It's going
Right.
to stay at least 3 or 4.
Condos that are rented out.
Condos just going to go out the door in 18 months, and then you got to replace that. You got to manage the construction process. It's a lot tougher than they just love multifam.
So where do you see multifam going, right? So I think that I read something yesterday about rent control in
It's
Boston.
all over the news.
All over the news. And I've heard that maybe you and I even talked about this.
We've been talking about it, yeah.
You and I meant Brian and I, but you and I certainly have been talking about
Oh,
this.
sorry. I wasn't paying attention. Don't hit the table.
I know. Asshole.
Continue. Rent control.
Rent control, bad. And that the BPDA had laid off so many people and not refilled them and cut back on staffing that they're so behind on approval of projects. Like, is Boston just shut down to development, and is multifamily going to the Everetts and Reveres and like moving out to places where they're more welcoming?
Yeah, but that's been a trend for the last 4 years, I'd say. It hasn't been today or yesterday. Yeah, Boston did have a slow year on BPDA, but that's an inversion of the ZBA. The ZBA approved just as much as it did the year before. You know, it's a big change. You got new mayor, new administration. So I'm not worried about the rent control. First thing, she came out with the rules today. It's 6% above 6% a year plus CPI, maxing out at 10%.
Plus CPI.
Yeah, plus CPI, but it maxes out at 10%. So
right.
I don't think that's the end of the world. And if that passes, I think it's a very small chance of it going through the State House. And for lack of knowledge, if the only reason I'm basing that on is if it was going to get through the State House, wouldn't Cambridge or Somerville have done it already? You know, so
I love how you think.
It would have happened already.
Yeah.
So, but 10% is not the end of the world. It's not the end of the
So
world.
I've had a handful of clients talk to me about this today. Nick reached out to me today, like we're talking about it as people who own multifamily, and then a client who I have several multifamily under contract for right now, purchasing, just kind of rediversifying a little bit of his portfolio. Actually, out of Boston, crazy enough, just like selling in Boston, buying more local here in Winthrop, Revere, and real fired up about rent control. And so we have a property under contract right now. I won't disclose the address.
Thank you.
And if you think like it's run down, right? And he usually does a really good job, like some of the best renovations, higher end, really nice finishes, like they could be condos, and just goes for a really high end tenant. Okay, top of the market rent. So if you think about it, buying one of these properties, not that it is rent controlled right now, but if it was rent controlled right now, the rent in one of these units is like $1,800. Market's probably $2,500. So what's the incentive as a landlord to clean up and renovate this apartment when you know you can only do some 10% a year, right? So if he buys this under market and tries to bring it up to market, it's going to take 4 or 5 years. Instead, he either leaves it, not updates the property, owns a shittier piece of property, or has to basically make it vacant, and then you can rehab it and then bring it up and potentially re-rent it. It's just like there's not a lot of incentive to fix up that apartment if it's already either nice and you just have bad rent. You know, it's a little bit of a catch-22 where, it's going to take years to bring it up to average rent. I don't know. It's just like
I think the devil will be in the detail. Like, so
Yeah.
if you're doing capital improvements, I think that's gonna bypass it.
Is that what C&I means?
the CPI is Consumer
CPI.
Price Index.
So
Right now is 6.5% last month.
Okay.
So 6% plus 6.5 max out of 10. You could only raise it 10%.
Oh, okay.
But usually
Does
it's
that
like,
mean Gucci's more expensive?
yes, it
Okay.
does actually.
All right.
So
Just
But
trying
you-
to understand.
it's inflation. It's
Oh,
inflation. So
okay.
But I
typically,
think that's mostly going to apply to year-over-year renewals
Right.
rather than
I
I'm going to
agree.
vacate your place and I'm going to put $200,000 into it.
So I just actually pulled up the article he sent me this morning. It's called Vacancy Decontrol as a rule that would not limit rent hikes to a new tenant over what the previous one were charged. And so if you have a vacancy, you can go ahead and rehab and do it. I'm just saying, like, if the apartment, let's just call it like a B- or a normal apartment that is just significantly below rent, I'm almost better off attempting to get the tenant out, create vacancy, do some work, find a new tenant, versus maybe keep a stable tenant in here who is a good tenant that I was taking care of over a long period of time because I can't raise the rent, which is silly.
Well, wasn't there an exemption for unit count, like under three
It's
three units?
Owner occupied multifamily, 3-family, probably 4 potentially would
Be
not
exempt,
apply.
yeah.
So for instance, if I'm living in it, I can do whatever the hell I want. But if it's an investment property, I would be hypothetically subject to rent control.
If you didn't live there, but what if you lived in all of them?
Well, sir,
I like to stay.
I'm
at this
fairly
one on
certain that's called-
Thursdays.
that's
I go
mortgage
on
fraud,
Wednesdays.
maybe, which no one has ever done.
No, I don't know
No,
anyone
ever,
that's
yeah.
done that. But not if you say they're investment properties. I think you can move into an investment. I think it's the opposite way. I think you can't get a mortgage for a primary residence and then rent it. I think you could get an investment property and then move in.
But I think by definition, then it would be an investment property, no?
I don't know. Let's ask our underwriting friends.
I think that's the IRS friends you got to ask, and they ain't really friends, bruh.
Oh,
Anyway, I'm interested to see what it will do. Like, as an example, I have a couple really long-term tenants that I kept on a deal for literally 5 or 6 years. And eventually, not so much from rent control, but like I'm looking at market rate rents and it's $1,000 higher than what I've been charging these people. So I got to raise the rent a little bit. Well, in reality, what I raised as like a 15 or 16% increase, which don't get me wrong, is big, would have not been allowed. And so by helping out my good tenant at a potentially lower rate, I've made my property worth less and handcuffed myself to raise it. And it would take me literally 7 years to bring it to market. So I would be better suited saying, hey, get out.
Or you could buy in a different city.
Which I can't terminate their tenancy because it's under rent control. I don't know. It's just like, I don't
Sounds
see
like a nightmare to me.
Yeah.
The ones who I think are going to feel it are the people who have been in the game for a long time. They bought their properties in the 80s and 90s, and
they're all sweetheart deals.
Maybe they're debt free. They don't, they're not maximizing them, so they're charging $900 for a one bed in East Boston.
Yeah, I agree with you.
They're the ones who are going to get hurt
because they won't be able to sell it.
They won't be able to sell it. They won't be able to, all of a sudden, if their children take over and try to increase rents, they're going to be hamstrung by the same thing.
And then try and sell it.
As an investor,
am I going to buy a 3-family in Eastie that doesn't even have a rent roll of $4,000?
Then you're not going to be able to get financing.
No, they're definitely not. So now what does that do to real estate value over time? That's an artificially deflated asset that if I got to deliver vacant is worth double.
Yeah.
I don't know, man. Bogus.
But I do think
this wasn't even on the agenda today.
No, it just happened. This is life unfolding around us.
I do think though people are scaremongering with it right now, thinking that it's all,
Yeah, I agree with you.
And I honestly don't think
it's a far way away too. Far way away.
The city aren't going to kill the golden goose,
No. Who is the golden goose, to be clear?
Tenants.
Oh, okay. Got it.
Like we're still amazed by the rents that we're seeing this year.
Commercially? Or residentially, yeah.
You're bullish on multi.
Bullish, yeah.
What about you, Adriana? What's your take on multifamily? Are you doing more like
I do
commercial?
Mixed
Commercial.
Use, 3 families, 4 families, 10 families, and then just typical single tenant commercial too.
But are you as bullish on multi as Brian?
I think they're still strong.
You'd answer his call if he tried to shop one of his multi projects.
Yeah, of course, absolutely.
And you know how to read a spreadsheet.
Yeah. Oh yeah, absolutely.
You got to think about it. Like my point of view, just from a residential housing standpoint, as rates have gone up and prices have really not fallen. We've walked back maybe a couple point decline. It's nothing noteworthy. And now that we have some stability in mortgage rates for the last 3 months. I'm personally seeing a ton of buyer demand come back, but all those people who stepped out of the market last year, albeit temporarily, plus all the new people in the market, millennials, better credit, more money saved, better jobs, more savings, etc. They're all getting the rental increase letters right now for what's going to happen this spring, and they're going to return to buying. It's going to just surge the regular residential market again. That's why I think right now real estate's on sale again. And were you going to say something?
So many things.
And I just think that, we're going to continue to be in this housing crisis because of folks like me who have a 2.5% rate.
No, because we don't allow anybody to build anything, right?
Well,
we have a shortage of stock because our zoning laws are so restrictive and you can't build anything. So the multis that Brian's clients want to build and Adriana's clients want to build can't build any of this stuff because you can't do anything. You have to go through this exhaustive zoning process that costs tons of money and could take years. And we don't know what the environment's going to be in 4 weeks, let alone 6 years from now when we might have shovels in the ground, right? We continue. And this is, as we do this podcast, my view is becoming much more crystal clear as to what I believe. But we are doing all these things to make housing more affordable that are having the opposite effect.
I agree with you.
Right? We are killing the housing industry by trying to make it more affordable when what will make it more affordable is allowing us to build more housing. Right? That's the problem. We don't have enough housing.
Yeah. All I was going to eventually get to in that spiel was there's a reason Revere Beach is apartments. Someone knows more than we do
because people want to live in them.
There's not enough housing, and so
guess what? How much do they cost?
A ton of money.
Yeah, so they're expensive.
They're building rentals over sales, which will keep the sale market high, keep the rent market high. It's just I don't know. And as rates kind of continue to ebb and flow, rents are just going to keep going higher.
But those people aren't competing
Unless
for
there's
the
rent
less
control.
affordable housing in the neighborhoods that are in the old triple deckers and the old,
No, I agree.
apartment buildings that won't be able to raise the rents as high because there won't be people wanting to live in them because they want to live in the luxury ones.
Yeah.
Right. So like that's keeping housing affordable in those other less impressive stock. Right. So like if you're got a budget of $3,200 a month for a 1-bedroom and you see a place with a pool and underground parking and a
Some
game
gym.
room and
Yeah.
some restaurants and a
Cut
gym.
21.
Beach.
Yeah.
Right. You're going there. You're not going to an old brick,
You're not
built
going
in
to
the
Seth's
70s thing.
multifamily.
No. But we need both. We need both
I agree.
kinds of housing, right? We need more housing, period.
That's true.
Yeah.
So with that being said,
Yeah, sorry.
No, that was
Soapbox stepped off.
it's so good. So obviously lending standards residentially usually don't change too much. Loan limit increases, yada, yada. Tell us a little bit more of like, what have you seen commercially happen? Like I'm sure everything's tightening up a little bit over the last year. Kind of talk to us a little bit about like those lending standards. Did you see them? Did you not? And like, what is, whether it's debt service coverage, whatever the indicators that you guys look at the most right now that you're seeing?
I think during COVID we had to pivot more from a lending perspective. Like we're not touching restaurants, we're not touching hospitality.
Okay.
Now we're kind of back into that game because it's kind of stabilized. We're looking kind of like, because to look at 2020, 2021, it's not a true representation of business. No one
Super anomalies. And in fact, we talked about it a couple weeks ago, just like residential transactions since like 2016. If you just look at Suffolk County, it's always like 15,000 some odd transactions every year.
Yep.
2021, 22,000. Crazy. Guess what? Last year, 15,000 some odd transactions, right? So everything from a year, I was all thinking about like, wow, what market's so weird. No, it's just like what it was.
Yep.
So anyway, continue.
Yeah, no, so we're still doing a lot of lending. I think obviously the increased rates definitely impacted cash flow. So people have to bring more to the table, or we have to kind of get creative in some ways. But that's really the only thing from multi or like investment real estate where we go off of debt service coverage. So, what's the NOI? Obviously rates impact the NOI, but from a like owner occupied business, it's still strong because we're looking at the business holistically. We're not just looking off of rents.
Yeah.
Let's say.
Yeah. So as far as debt service coverage, is there a rate that your bank specifically is always looking at? Usually 1.2, 1.3, something like that. I imagine.
So we have Let's Loose. We could play around with it a little bit.
I might be interviewing you right now. I'm just kidding.
So typically we use.
She did say some great words like creative. I
yeah.
love to hear
Creative.
creative from a banker.
I love creative financing.
Yeah.
Me too.
That's why we love you,
Creativity
Adriana.
is key. So we go off FHLB, so Federal Home Loan Bank of Boston. That's kind of our base. We usually
I don't even know what that means.
I'll show you after.
Cool.
But we usually use that and a spread off of that, and that's kind of what we plug into our debt service.
Very cool. What about you?
Yeah, we're seeing the last 36 months I shouldn't say last 36 months. 2020, 2021, it was easy. Rates were 3.5%.
Yeah,
so
everything covered.
Everything.
Now, even before you look at the deal, debt service is going to be the key factor. So everything is debt service driven right now. And, there's levers you can pull that, test it on year 3, 115 instead of 120, 110. Like, you can play around with that a little bit, but
Are those breathalyzer scores?
Do you understand debt service coverage ratio?
No, God, no. I
Dude,
just hear
ready?
numbers and it's like,
Well, it's funny. Like we got to make sure we do a good job for the listeners.
yeah, because I'm the
understanding.
listener.
Right. So debt service coverage, and correct me if I'm wrong, but I think it's pretty accurate. It's just there's debt that you're going to take on, and then there's operating income after all expenses that's available to service said debt. So a very layman's terms, if I had 10 grand in debt and the bank's looking for 1.2 or 1.3 debt service coverage,
I got to make 12 or 13,000 to
and
cover
operating
the 10.
income available to cover
Ding,
said
ding.
debt.
Ding,
There's
ding.
got to be some skin in the game because you're going to sign leases. You default, they just take that shit and they make the money.
Yeah. All right.
How'd I do?
Good job. A
Well,
plus.
we're seeing
A plus, shit.
going hand in hand with that is a lot of deals now have negative leverage. And
What does that mean?
so negative leverage is when the debt constant is higher than the cap rate. So if you're borrowing at 6% and you pay 6% interest,
I just learned something.
so the debt constant is the monthly payments divided by the loan. So if you're paying interest only on a 6% mortgage, then your debt constant is 6%. If you're amortizing that over 25, 30 years, you're 7.5%, 8%. You're buying something at 6% yield on cost, but you're borrowing, your cost of funds is, I shouldn't say your cost of funds, your debt yield is 7.5 or 8%. You've got negative leverage. The implication of that is the more leverage you put on, the lower your cash on cash returns on your equity. So if you lever up to 80%, 90%, you're getting a lower cash on cash return than if you do a 60, 70% leverage. So that's what we're seeing.
And
now.
who cares about that? The bank, or the
Little of
borrower?
both.
Both the
Little
bank,
of both.
both the bank and the equity.
Okay.
Every buyers say they care about cap rate, but really they care about cash on cash.
Right.
Agreed.
So
We complain about cap rate to try and get a better deal.
everyone wants a double digit cash
Yeah,
on
or
cash.
raise my appraised value.
Yeah, everyone wants that double digit cash on cash, 10, 12, 14%. But, the implication of paying a debt constant of 7 or 8% if you're paying 6% interest. So the tools we use to play around with that is maybe you're going to get 2 years interest only, then you can stabilize the property.
Yeah.
So that's what we're seeing right now is
Makes sense.
stuff that, would have supported 80% leverage 2 years ago
Right.
doesn't right now.
Yeah.
So you're getting more creative.
We're getting more creative.
There's such a desire for that type of product, though, because like we talked about with the multifamily example that hypothetically may or may not be under rent control, that's a good example of something that you could still potentially buy, maybe, and obviously this is probably not a great example because this doesn't exist yet, but you could buy a property that doesn't come close to covering. You just got to solve it in the next, 8 to 18, 24 months, and you just go right back and figure it out, and then it covers.
It's like a pull and pray that the interest rates go down.
There's so many good terms coming out of this.
We've been, because Boston's such a strong market, we've been dealing with this for the last 4 or 5 years anyway.
Yeah.
So with cap rates going down to 3 to 4% if you're on Newbury Street, Back Bay, if you're at Downtown Crossing, we did a build in Downtown Crossing, it appraised at a 4 cap, and the guy wanted to do a cash out refi, but the most it could support was 70% leverage, and even at that, the debt service is 1.05, and it's just you can't.
Shitty deal.
It's
it's not.
It's a 4 cap. It's downtown.
Yeah.
It's Downtown Crossing. It's not.
Yeah.
It's like gold.
Right. Interesting. Are you a cash on cash guy?
I don't even know what the fuck that means.
So, listen, when I was first,
Sounds like an Easter egg.
you know how we were talking about this the other day, like when I was first trying to buy multi,
Yeah.
I was like, I just want to make $2,000 because I was so
Yeah.
focused on replacing paychecks so I could quit my job. Right. Hopefully they're not listening. So
Ooh, Best Buy?
yeah,
Well, they know how that worked out.
Yeah. So that's all I was focused on. Now I'm more focused on cash because it's the cost of deploying capital, that I could have bought anything with, or I could have invested elsewhere. If I'm going to spend this money, when do I get my money back?
And that's what the spreadsheet does? It tells you
spreadsheet
the
tells
cash
you,
on
yeah.
cash?
Yeah, it
and
gives
you
you-
have that one.
Yeah.
No, you don't have the
Spreadsheet
cash
can do
on
anything
cash
you want to do,
creator.
depending
Yeah.
on the inputs.
Yeah.
That's why you can lie to yourself all day and.
I do that a lot.
Does it just give you cash?
I'm never gonna-
I want that spreadsheet.
Yeah.
Where's the
Yeah, same, me
spreadsheet
too.
that gives you cash?
When you find it, let me know.
It's just important. Like if you're gonna drop $100,000
Yeah.
as a down payment, and in that example of generating $2,000 a month,
Yeah.
it's gonna spit back $24,000 a year. So that would be 24% cash on cash. Let's go.
And that
actually
doesn't
really-
seem great.
No, that's
that's a
actually
great
it's
Oh,
killer.
that's good.
Yeah.
24%
Let me give you an example.
Yeah.
Airbnb property in Florida.
Yeah.
We bought in April. Cash on cash is 53%.
Wow.
Oh, okay. So you didn't put a lot down, and it's spinning off a lot of income. Is that what that means? Low investment, high output.
Essentially, yeah. So
Okay. Now I get it.
I shelled out my down payment,
Yeah.
and because it's 53%, I'm going to get half my down payment back this year. So
in 1 year. Okay.
Yeah. So I mean, that's unheard of cash on cash.
Mm-hmm.
That's like you invest $100,000 in the market,
Yeah.
and you're going to get back $50,000 in profit in
This
year
year.
one. It's never going to
Yeah.
happen. Martin ain't doing that for you. Sorry,
No,
Martin.
he's
You know.
good. He's not that.
So that's become a little bit more of an interesting metric that I look at. It's not how I make all my decisions, but it's something that I consider for sure.
Would you say that's top of your list?
It's become more top of my list. more so as a small business owner, where cash
Yeah.
is like, I don't know. I don't have enough of it always, right? So it's just like you never know what's going to hit. And if you think about what's just happened in the real estate market these last, 9 months, like very quickly the market can change and you just bleed out, right? So, which happened a little bit, right? So I think that if I'm going to deploy hard-earned cash or capital right now, it's something that is going to...
It better make your money back.
Yes.
Got
yeah.
it.
But
So
I
what's
also...
a good cash on? So for like
double digit.
double digit, that's like baseline for newbie. Like if I'm getting into my first deal, I want to look at cash on cash above 10%.
Yeah.
Okay.
Yeah, think about it. Like you're not getting 10% in any investment usually
No.
anywhere. And right now, maybe that's not enough because of inflation. But I don't know.
One thing I'm seeing, I'm curious to see if you're seeing it too, is the day of cash out refis are gone because
Done.
because the rates. So we're seeing more requests for line of credits. And they're tricky. They're hard to
Sorry,
do.
guys.
Rule breaker.
I break the rules.
They're hard to do because it's your second mortgage behind someone else's first mortgage.
Yeah.
You're not in control.
Yeah, we just talked about this on the phone.
Yeah, but we're seeing a lot of people are open to it. I mean, I shouldn't say a lot of people. A lot of banks are open to it because they understand this borrower. He's at 3.5%. He's at 4%. He's not going to pay it off to go to 6%. To get a second mortgage.
Right.
So we've been seeing a lot.
Do you think? Sorry, I didn't mean to
No,
interrupt
you're
you.
good.
Do you think the bank is more concerned with keeping that low interest debt on the books?
The first position.
Yeah, like the person that I have 4% on, like, are they worried about me going somewhere else at 6%, or they just know that I wouldn't? They know the deal doesn't work at 6%.
I think he's talking about the second lender, knowing that you're never going to dump the first lender to take out a new loan at 6%. Right?
Did we just confuse you?
Yeah.
Yeah.
I think
So
it's a
he's saying, I think what you're saying is lender 1 going to try to keep me at 3 versus is lender 2 going to let me have like 90% leverage because they know I'm at 3 on the one that's at 80% leverage.
Now my brain hurts.
Yeah, they won't go to 80-90%.
I'm
I'm
just
making
saying,
the numbers up.
I'm
but,
just
but
saying
like
you-
bank 1 is never going to give up first position,
No.
especially if you're 3%.
In my case, no.
Yeah.
We don't want to be in
Second.
second
No.
position behind another bank. What
you be it to yourself.
Yeah, what I've been seeing is, to your point, is so if we have the first mortgage, we're coming in and we're taking a second mortgage and a kind of a non-revolver line of credit or just straight cash in your pocket, because that way you get to keep your first mortgage at that low rate
Sure.
and then access to your capital to reinvest.
Yeah, and what you were saying earlier, you know, with multifamily, they're going to be there for 5 or 7 years. So if I'm asking for that and I get denied, then I would hypothetically maybe go elsewhere to refinance this, and then you would lose me anyway.
Correct. So let's say if you refi 2 years ago and you're at 3.5-4%, the bank either, going back to the existing bank, they either give you a line of credit and give you some cash with a higher cost of funds, but it's a second. If they go to refinance and they use today's rates, chances are the property doesn't cash
Deal
flow.
doesn't work.
No.
So do you want a loan in default or do you want to give the guy a second mortgage?
I think too, from a relationship
Valid
perspective.
point.
From a relationship perspective, you're going to come back to me if you buy another
Right.
property. What I just gave you.
Yeah, 100%.
So growing that too.
Yeah,
So
Yeah.
weigh the pros and cons.
yeah.
What
Seconds on everything. Let's
Well,
go.
what do you think the max loan to value you can get on a second is?
We're at 75%.
75.
Owner occupied 80. Then medical maybe 85, 90.
What does that mean?
If you like a owner occupied doctor's office, something like that.
okay.
Go a little higher on the LTV.
I thought it's like, if I was in medical debt, I could get more money. I was like, I can make that happen, man. No
Breaks
problem.
his arm.
Yeah. help me.
You lending on marijuana yet?
No.
No marijuana.
Most people won't, right?
Some
Yeah.
people will.
There's a couple banks in Massachusetts that,
They're probably killing it.
yeah, I can imagine.
Yeah.
Yeah, I saw my first. The banks were doing it, but they weren't advertising heavily. And now I've seen on LinkedIn, it's like cannabis lender. It's people
Oh,
people
interesting.
are advertising. That's their job. They're being out front with it.
Yeah, I know a
And,
cannabis banker.
Yeah,
He used to be at Northern, I think. Northern was big in cannabis.
Yeah.
He may still be there. I feel like he left though, but I know Northern was like trying to get in. Century
Yep.
was big before they were acquired in the cannabis space. So like there are definitely people that are playing in it.
it's a funky space though. We've
It
done
is.
we've done a few deals, and it's the cost is so it fluctuates all over the place, and they're like inversions of each other. The medical or the recreational. demand goes up for one, it goes down for the other, and it's just it's
And they're like simultaneously existing.
yeah, and you're underwriting the business. You're not really underwriting
Yeah.
the real estate. Like you buy an industrial building out $495, and you're paying $50-$70 a square foot, but your fit out is $300 a foot. You know, if cannabis with a strike of a pen becomes federally illegal tomorrow, or state illegal, I should say.
Bye.
But like, what's going to happen with all that collateral? You know, like, are you going to, vertical farm
Up in smoke.
Yeah.
Get it?
Got it.
Hey.
I think too, there's no historical data for banks to look at from like
Yeah, that's
lending
true.
perspective.
Yeah, it's true.
It's like, what's really how do we know the risk?
They have to go back to prohibition.
Yeah.
I don't know
new
if that.
space.
I don't know if that works.
And then the flip
Yeah.
side, if it does become federally legal, then all these places up here are gone out of business overnight. You know,
Really?
there's a reason why we don't grow bananas here. You know, you just can't. The environment. Sure, you could build big warehouses and hydroponic and lights and all that and grow bananas. Isn't it cheaper to bring them up from Brazil? Like it's so you go down California, wherever, down south Arizona. Surely they can.
There's
grow
no
it.
water though,
Good one.
right? Arizona, they just shut off like an unincorporated township from all their water. They can't build in a development anymore. They got like half of the development built, and they were like, "Oh, sorry, no water for you."
Is that real?
Yeah,
You'll have to send me that article.
water is a huge problem in the Southwest right now. The Colorado River is like almost dry.
Sick. We're
Yeah.
all gonna die.
Yeah, I want to move to
It's all-
Arizona. Do you think it's on sale?
It probably is. They don't have any water.
I love a sale.
Why can't you just
Me
dig a
too.
well?
Yeah.
Anywho,
So one of the things that Seth and I really wanted to talk about too, and I think it ties to rent control and the occupancy discussion that we saw. Are we seeing, what are you seeing for occupancy in Boston suburbs right now? Is it impacting lending at all?
I don't see any vacancy in multifamily in Boston. A good operator is above 94-95%.
Same.
And office, no, that's a different,
Yeah.
yeah,
story.
let's talk
but-
about office.
Let's talk one of my favorite topics.
So like it's down. Obviously, it's down.
What would a normal occupancy rate be in office in a big city?
Probably 90, 93. 7% vacancy is probably fair. There's a difference between physical occupancy and occupancy right now. So a lot of offices are paying for people not to go to work, but they're afraid that if we go fully virtual, we're going to lose staff, or they're going to go down south, or they're not going to stay around. The whole hybrid working thing. Like, so I'm downtown every day, and I can tell you that, you go out for lunch, downtown, I'm very bearish on downtown right now. The retail is dead. Every second store around P.O. Square, State Street is vacant.
It's crazy.
Yes, but,
So is now the time to buy
Yes.
downtown office space?
It's still expensive though.
I
It's
don't
still
know.
really expensive.
Yeah.
I don't think we've seen the real.
Correction.
Yeah.
Is this the Lehman Brothers moment?
No.
Is office the Lehman Brothers moment?
You look at the big office, BPX and all those other guys, like, they're so well capitalized, and their equity is
They don't care.
Their equity is our pensions. There's such low leverage. They're very patient equity. They don't really, they're not being forced to sell. The smaller Class B office, they're going to be under a bit of pressure right now, because what we're seeing and what we're hearing from people is that tenants want to lease the best space possible. So they're going into the Class A, $70-$80 a square foot. But your 6-story brick building from the 40s, and you have it priced at $40 a foot, that might just sit. If COVID comes back and people are talking air filtration, all that kind of thing, like, the new buildings are equipped to deal with that.
Are they just taking less space? So if you were an office tenant at $40 a foot and you had 10,000 square feet and you jumped to 70, are you taking 4,500 square feet and just getting better class space, but just less of it to?
It's a bit all over the place. Like,
Okay.
Some places, everyone, for the last 10 years was all hot desking and bullpen, and no one has an office, it's all open. And then with COVID, people went back
Cubicles.
Yeah.
to
They
isolate.
came right back.
People went back to, people want to have offices and close the door and stuff like that. So it's a bit all over the place right now. It really depends on the user. And then everyone's waiting to see what's going to happen with lab. There's a lab boom coming. Is there a lab bust coming? I don't know, but
You would think with all the stuff going on in Suffolk Downs, all the biotech and lab spaces coming. I mean, why would they be building that if they thought there was a bust, right? Like, I feel like, I'm not saying you're wrong. To
I
be
think
clear.
but I think there's a lot of lab developers, and Suffolk is one of
spec.
those. No, but I mean, there's a lot of professional big lab developers who they know the best lab tenants. They have PhD students on, not PhD student, PhD staff on payroll reviewing the products that these labs are building and the drugs they're testing. The likelihood of getting through FDA, all that. The people who are going to get hurt is the condo developers who turned into lab developers overnight, being like, "Hey, they're getting $200 a foot. Yeah, I'm gonna sell. I'm gonna lease up lab." So, if you tie your wagon to a lab tenant who's gonna go out bust in 2 years, and you spend $500 a foot on their fit out, then that's not great. From a bank perspective. Or
Did you say tire wag?
Tie your wagon. Hitch your wagon. Hitch your wagon.
Hitch your wagon.
Tie your wagon.
Oh.
I thought you were talking about hitting someone with like a tire iron. I was like, you lost me.
Yeah, I was trying to think of something.
No, that makes plenty of sense. We spent a lot of time talking about this, and that was way more articulate than we've said it. Like we've talked about
Well, he's
this.
way smarter than we are.
These like commercial,
that's clear from
like
just
boring
minutes.
office spaces, the dated office spaces that aren't these super shiny glass, whatever, open, flexible spaces that are sitting vacant, maybe the smaller time landlord versus the big corporate ones. How do they convert into what I've said maybe is residential housing? And you're saying maybe some people are going to think, let's convert to lab. That's where the ROI might be, and they're going to screw it up.
Yeah, the thing, lab likes a floor plate of 20,000 square foot. So a lot of those downtown buildings aren't going to have a floor plate of 20,000 square foot. Like outside of the Class A 1980 stuff, a lot of those are smaller than that, and that doesn't work for lab. And the fit out in these labs is crazy. I went through one of the buildings at Cambridge Cross, and the HVAC system was big enough you could drive a car through.
It's crazy.
It's unreal. The fit out these guys are doing. But yeah, I'm just not. We're downtown every day, and I'm not seeing a bounce back. And I'd say 50% of that is COVID, and the other 50% is the boom of the seaport. The boom of the seaport is definitely
Because you're in PO Square.
Yeah, right off State Street. So
Yeah.
like it's
The fact that they're still building over there is just insanity.
and I'd say that's not even. We're nowhere near half of what could be.
Really.
You think further down Pappas Way,
I know.
down by Marine Boulevard, like it's there's so much more to come. And Southie is booming right now, and Southie's only a walk from there.
Right.
I got a tour of the St. Regis last week. Unbelievable building. Penthouse sold for $4,200 a foot. Like the numbers down the seaport are just insane.
They are insane.
And I'd say it hasn't even hit its stride yet in terms of restaurants and nightlife. It's on the way up.
And they're definitely trying to get businesses there. I think they're trying to move businesses from downtown to there, like advertising to it.
Yeah. So what happens to downtown?
More resi, I think.
Yeah. That's what we've been saying. These big office buildings, they got to convert. And, sure, let's leave some stuff retail, some type of transient, maybe a little bit of office, and then, let's just make the whole thing sick condos.
Like Winthrop Center's coming online now, 2024. Yeah. That's going to be big. Millennium's already there.
But our zoning and our approval process is so difficult that it's going to take forever. And the market could totally shift by the time the government swings around. It's like turning a cruise ship around, right? Like it's never going to swing fast enough to accommodate the problems, right? And right now, I feel like we have an administration in place, especially at City Hall in Boston, that doesn't care about development, doesn't want development, and in fact is taking steps to curb development. And they're, in an effort to make more affordable housing, is stopping development.
Such a catch-22.
Yeah.
I think for downtown too, don't forget a lot of those people are locked into long-term leases, so we won't see the effect of those until the leases expire, because they're still paying. They're bigger companies.
Yeah,
right. So they're not going to break.
Yeah, they're not going to break a lease.
Goodwin Proctor is not going to break their lease, or Hale and Door, and they're not even around.
Don't you
anymore,
think some would just try and renegotiate it,
or sublease?
Yeah, or sublease, depending on what the lease the lease looks like.
I skedaddled right the hell out of my commercial lease. Let me tell you.
But you look like the new office tower going at Haymarket, the State Street building, 100% leased.
Yeah, it's crazy.
35, 40-story tower, 100% leased.
So where are those tenants leaving?
State Street are taking 20 floors. And then
someone else big just announced they were going over there.
Some law firm? Or
maybe a private equity firm.
Yeah.
From like One Financial Center, maybe.
But it's a great location.
Yeah.
Great location. You got
if you're coming from the North Shore, right? Like if you lived in Hingham, you're pissed that you just left One Financial Center across the street from South Station. You got to go to North Station. You live in Beverly Farms. You love it.
We're a bit biased.
Yeah. Incredibly.
Cool. What else? You guys want to take a quick break?
Sure.
Cool. Is that cool?
So what do you think?
You going to go off on your ferries again now?
I don't know. Depend. Only if the moments.
The ferry does go there.
Strikes.
I thought that was hilarious.
Man, he's been so good. Did you see the coyote one yet?
I haven't posted it.
Oh,
I haven't
dude, wait
seen
till
the
you see
coyote
this one.
I'm the opposite on ferries though.
You hate
You
ferries?
hate ferries,
So I still have to drive to get to a ferry.
but not very far.
Okay, well,
Right, but if I'm
What if there were one in Marblehead? What if there was one in
if
Old
it-
Town?
at Fisherman's
it takes me
Pier.
15 minutes to get to Old Town.
What about Fisherman's Beach?
But the parking? There's 10 parking spots?
We'll put a fucking garage up.
No, but like how many cars could park in the one in Lynn? 200?
A lot. Yeah, it's big.
That fills pretty quick.
All these assholes will ride their bikes in the bike lane.
On the Lynn Way.
Yeah, we're gonna put. Brian, we have to reimagine the streets.
I agree with you on cost. Like put it back so it serves that many people, but it's a small amount of people.
The ferry.
The ferry.
You hate the ferry.
I don't hate it. I just wouldn't get it.
He's in Charlie Baker's camp.
So I just want to let you know that I, in theory, love the ferry. I talk about the ferry because it sounds awesome. And I talk to, when people visit Winthrop, because Winthrop has a ferry, very poorly run, on the record. And they do have a great parking lot. But during the summer, it's filled with boaters. So there's probably not a lot of parking. But if you live down there and you work in the city and, you don't want to waste your time in a train or in the tunnel or whatever. Yeah, listen, is it efficient? Not really. But pretty cool ride. First thing in the morning to hop on a boat and zip around. Might mess up your hair, but
I've taken the one to Hingham, and the one to Hingham is like booze cruise.
Yeah,
Thursday,
on the way
Friday.
home on
Oh,
Thursday.
yeah.
Yeah.
That's what I'm saying. It's like, it's going to be 90 degrees out. You're going to blow out of work at 3 o'clock.
Yeah, yeah.
I'm taking the fucking ferry. You know what I mean? Like, what a day.
It's
You don't got to sit in traffic.
Yeah. And even if you are, you're on a fucking boat. Who cares?
And
Yeah.
when do you have a bad moment
On a boat?
on a boat?
You don't.
Right.
When your boat's broken.
Well, when it's someone else's boat, you don't care.
I'll remember that.
so are they bringing back the ferry, or is it?
I don't know. We don't know yet.
Where are the boats going? Are they just?
We never had a boat. The boat was Boston Harbor Cruises.
Yeah.
So they did a pilot program. But Congressman Moulton got the city of Lynn the money for the boat, and the governor said, no, we don't want it. We can't operate it.
Does Salem have a ferry?
Yeah.
Yes.
Yeah.
Yep. High speed.
It only makes sense for Lynn to have one.
Yeah.
I'm with it.
Me too. And you could drive your bike or buses. People take buses, I heard. I mean, I'm not one of them, but I heard that people take the
I
bus.
think it's a lie.
But it's good. It's good for development, right? Like if you have transportation centric development, other people want to do those things.
So did the city of Lynn own that parking lot?
Yeah.
Is it the garage by the commuter rail? Is that what you're talking about?
No, we're talking about the ferry parking lot. They built a whole ferry terminal. Like the city of Lynn.
Where is it?
At the end of some street.
Wow.
Yeah. But where Dunkin' Donuts and that jank Dunkin' Donuts in that strip mall?
You'd have to be more specific.
Where Boyd's Potato Chip Factory was?
Is that by the hood?
No,
Milk factory?
on the Linway. On the Linway. After the milk place. There was a
After the milk on the
potato
way to
chip
Nahat.
place. And now there's a Ferguson home showroom.
Oh, yep.
And then there's a jank strip mall.
Yes.
That street, at the end of that is
Where the Dunkin' Donuts is sideways.
Yes.
Yeah.
Yeah.
It is
And there's a
very
nice
janky.
one across the street.
Yes.
Yeah.
That's like the sketchiest strip mall of all.
It is the sketchiest. And
Because
that traded recently for like a lot of money.
They used to have the
Developed.
COVID testing in their parking lot. So I drive by, I'm like, what the fuck?
You get your coffee, get COVID tested, rip the ferry,
I used to go to the tanning salon in there back when I went tanning.
catch a
Don't they have
tan,
like apartments upstairs or something?
catch a
No,
tan.
No, I think it's
get-
all business.
Oh, is it?
Yeah.
maybe some hepatitis. You never know. You know
I
what
only
mean?
did the stand up because I didn't want to lay on the beds.
That's good. Good call. Good call.
Shit.
Shit. I wish tanning was good for you. It'd never not go. Tanning, smoking, my life would be so good.
Sounds like you need to move to Florida, man. I don't know what to tell you.
I'm on my way.
Yeah, a couple more years.
Yeah.
All right, good. All right,
So guys, you were talking about, how well, you weren't talking about it. Never mind. Scratch that.
we're talking about the flexing market.
Yeah.
And how you think it's fun or engaging is a better word.
Or how you
Makes-
got bored with it being constant, right? Like doing the same thing all the time, right? So how has the current market made you look at your business differently?
Like you're right. If it's constant, it's just okay. I'm buying a 4 cap. It's going to stay a 4 cap. If I'm, if there's a bit of flux in the market, you're seeing the potential. Maybe you're getting a deal that, 5%, 10% off what you would have a year ago. On the flip side, then you're paying a higher rate, but you're taking the long term view. And then the flip side of that is lenders are they're lemmings. They're very slow to react. And if they hear that one other bank isn't doing something, it's like, oh, that bank aren't lending in that town. Let's stop lending in that town. And it's like, why? Just because that guy said it, So we're getting more inbound calls. So my lender who I've been with for 10 years said no to me. I've done 20 deals together. They retraded, went from 80 to 70 LTV, things like that. So back 2015, 2016, when East Boston Savings, shout out to them, they were crushing the market. They were putting so much money on the street. 2015, 2016, anyone with a pulse could go in and get an 80% loan at 4%.
Who's doing that today?
No. But back then it was like you could hire us and pay us a point, but or just walk into East Boston and get the same thing.
Right.
So right now it's like we're able to justify our fee a bit more by making the market and finding the anomalies. So like by us going out to the market, I'll just give an example. A small deal we're doing right now, condo conversion in Cambridge. We're seeing a huge disparity in rates. So most banks are pricing it off prime, condo construction. So it's prime plus a half, prime plus 1.5. Then some banks are fixing it, 6.5%, 7%. So you're talking 6.5% to 9%. That's a huge, spectrum of rates right now. And it's just a matter of knocking on so many doors. Like we get shit on all day. We get no's all day. And if everyone's saying yes, then we're not pushing hard enough. It's like
parenting.
Right. So
if your kids don't need therapy, you're not parenting hard enough.
So I don't know about that one.
Oh, that's not real.
I don't think. I think that was last generation. So we're all in therapy now.
It's because it's needed.
Well, I'm sure you're the same. Like I love being told no, or that can't be done, or like you're asking too much. It's like, go fuck yourself. We'll figure out something. we'll find someone else. I think
it's an opportunity to learn and pivot.
Yeah,
it's like it's a new market.
Yeah,
what comes up must go down. Yeah. And what goes down must come up eventually. So. It's just a learning experience.
Are you finding the same thing? Are you doing things different today than you were 2 years ago in your business?
No.
I
think we're looking at it maybe more like, obviously, like if you're talking about restaurants and hospitality, you're talking about what happened, what was the impact of COVID, have they recovered from that? We don't want to put them in a worse position.
Yeah. No, I meant more like, is the business knocking down your door? Are you out pounding on the pavement, networking, doing more stuff than you were when rates were low and everybody was showing up?
I think it's back to the basics because refis are not walking in the door anymore. Everybody had 6 and 7% rates. They were calling you when the rates were 3. So that was like, and you didn't have to really call. So now it's back to the basics, back to the consistency and kind of prospecting, networking, and seeing what else is out there. It's a pivot.
Yeah, we were just talking a little bit offline, and like that's definitely my biggest aha moment. Just trying to take 3 or 5 days a week, hopefully. You just contact whether it's the past clients, the whatever your sphere of influence, your follow ups on people, and those new inbound people that you haven't been hitting. I know personally I stepped aside and delegated that internally to our inside sales team. And, I think we all got in these positions because ideally we convert the best. We can explain it the best. And so, it was a huge ball drop for me. And I know that, it's far too late, but fall last year, market starts to get a little bare. You're back doing that work. And the folks that do that work right now are going to be the ones who have the business this year.
Yeah, absolutely.
I think so many people got super bloated on refi, right? And there's so many different residential loan officers, like they're so refi heavy. Oh, yeah. And now that like that shit's not coming, man, like they're not eating. You know what I mean? Yeah. So
I think you see who's still standing too.
100%. I'm looking forward to the flush out. I got to be honest with you, across the board.
Are you guys seeing the flush out in commercial as much as they are in residential? Like, do commercial blow up as much as residential in terms of agents, loan officers, that sort of stuff?
Not so much in my world because I work from a bank perspective. Maybe more on the broker side. What do you think of, outside?
A little bit, but not. Yeah, same.
Not like resi.
Yeah. Not really. No, not like definitely not like resi.
Resi, everybody wanted to be a lender.
Yeah.
And I've a gripe with those resi guys. So like.
Oh, we love gripes. What's your gripe, buddy?
So did my first mortgage 2016, and the rate was like 4.6, 4.7, and I waited a couple of years and like busy working. I wasn't focused on my own stuff, and then
Nobody
called my guy, and I was like, what can I get? And he's like, I can get you like 2.8. And I'm like, why the fuck aren't you calling me? Like, if I can see a business opportunity, I'll call my borrowers and try to refi. I'm like, why aren't you calling me? And he's like, I've got too much stuff to do. And I'm like,
because they're too busy processing new purchase, and
it's like,
yeah, it's
is it
crazy.
that hard to make some sort of spreadsheet,
Or hire a virtual assistant to call
someone.
people and make appointments.
It's not that hard.
No, you know what it is? It comes down to database organization, and you should see these people when they dip to a certain point, or even if they come to a point of some blended equity, right, where like they could ditch their PMI or something. That should be a quick call. Hey, what's going on, Brian? How are you? Hey, I know we haven't talked in the last 2 years, but you know what I was thinking about you today? And by the way, your home anniversary just happened. Like, could I save you a couple $100 a month? Would that be worth a 15-minute quick consult? Like, dude, who's not like, yeah, man, when can I can we do it?
Seems like a no-brainer.
Yeah, well,
It's not.
yeah, it's a different business. You know what I mean? And I feel like I do think that there's so much like pings and dings in this business. Like I was even talking to Brendan this morning. Like I've been trying to be way more purposeful when I do that prospecting. Go D&D focus on the phone. Like I leave it in the other room and I'm doing this right now. There's nothing that's going to come across in the next hour and a half that is more important than me just following up with clients.
Yeah.
There's nothing. By the way, if there is, someone's going to walk in here and be like, your phone has rang 3 times, because they'll double tap you until
of course.
you know what I mean? So like, I just, if you don't have that type of discipline, which I'm like just building back, you know what I mean? It's so easy to just like, I was on the phone for 55 minutes the other day, yucking it up about a shitty deal going on right now. Like that could have been spent following up with those clients.
Yeah, you do have to set the time aside. If you don't, you'll never do it. Something's always going to come up.
Always.
You have to set the. I tell my team this too. You have to set the time aside. If you don't, you'll never do it.
You're gonna love this. I have a new coach. His name's Luke. He's the man. Super smart guy. He said, I want you to.
Is he taking more clients?
No. Oh. He told me to get a label maker and put $1,000 an hour on the computer screen. And whenever you catch yourself doing something stupid, you're gonna see that and be like, what the fuck am I doing right now? And I went through I coupled that, and that started from a conversation because I heard Tom Ferry say something the other day, said, write down the 6 most important things that will affect your profit today. And I was like, oh shit, boom. Get more listings, follow up with past clients, recruit more agents. Like I was just like so quick, refinance business debt, whatever. Right. And I was like, I had ultimate clarity of these 6 things. And then I looked at my to-do list. It was like pay the national grid bill, find out the acrylic size for a sign that we have to hang, like stupid, not $1,000 an hour activities. And I was like, shit. And I was like, time block, changed it up. Just like literally deleted the to-do list because it just didn't matter. It was busy work, super easy to get caught in it. And I think we all get caught in that stuff all the time because you said it earlier, like the time will fill.
Oh, absolutely.
Yeah.
I think creating a to-do list just to create a to-do list too. That a lot of people do that.
I do that.
Like back to your point, how is that aligned with your goals? Like how is that aligned with your profit or what you want to make? It doesn't.
In fact, sometimes I make multiple to-do lists. And then when I get through my to-do list, I throw it out and I write a new to-do list. Like I feel really good about it though. Yeah, right, exactly. Yeah, it's crazy, man.
I've kind of become very diligent on my calendar. Yeah. It's just not letting the day, dictate how your emails, your phone. There's always the squeaky wheel. So the way we do it in the office is everyone has their own pipeline. And, whatever percentage you are at your pipeline, that's how much you work on your pipeline. And then the rest is BD.
Tell me more what that means.
So let's say I'm 60% a goal. Then I'll spend 60% of my day.
So you have a quota of loan volume?
Everyone has a goal for the year. So, it varies. So, yeah, I'll spend 60% of my day working on my pipeline. And if I don't get to all of it, then it goes to the next day. And that's the hard part is like not
triaging the 60%.
And then going, jumping from, okay, this deal's on fire, this is blowing up. Okay, I got to set that aside. Now I got to go call or look up the registry deeds and, start doing some biz dev.
So if your pipeline, let's just use super elementary numbers, was $10 million in loan volume this year, which hopefully it's not, and you were 60% of your way in that pipeline, you would spend 60% of your time blocked calendar prospecting.
I'd keep it year to date.
Okay.
Yeah.
But you'd allocate more time. Yeah, right. You'd allocate. Okay, I see what you're saying. So it might have been, well, in that dumb example, it would be 60%.
Yeah.
You would spend, no.
Yeah, managing
40%.
his pipeline. So
Yeah.
so you would be talking to the appraiser, talking to the borrower,
Yeah.
talking to lenders for 60% of your day. And then if you close that loan and it bumped you up to 67%, the next day you'd be 67% of your pipeline?
Well, I adjust it every week.
Yeah.
So yeah, I would. And then if we're full up, if I'm ahead of goal, then I won't prospect. I should still, but like maybe I'll go to dinners, things like that. Like I won't dedicate 9 to 5 stuff.
Yeah.
That's
cool.
Yeah, that's it, it's just the way it is, and there's always, you can always find like pipeline deal stuff to do. But Adriana, you'll agree with this, but everything will make a deal much harder than it can be, or much harder than it should.
I do it all the time.
It's like every deal. It's not rocket science. You're not reinventing the wheel. Like everything.
It's not.
There's 4 or 5
Fixtures.
stages a deal is at, and you're just trying to move it down the pipeline. And the way our pipeline is a funnel. You put in a lot of deals, and then it just get narrow, and then you got. You might have
they flow through.
Right, like, so the way we have it, you probably have to have 20 meetings to get 10 real looks at deals, 5 engagements out or 10 engagements out the door, 8 or
One term sheet.
8 or 9 of them signed. Usually we've good hit rate on our engagements, and probably 80% of our deals close. And then we have different ratios depending whether it's a refi, whether it's a construction, whether it's equity, whether it's just a purchase. So we're pretty good at tracking the likelihood of our probability, and every year we're pretty spot on our probability.
That's awesome.
And do you have a similar like time blocking method you use, or how do you structure your day?
So time blocking is big for me. I recently just started doing that because I didn't do it before.
It's awesome. You got to do it.
I was working from home. Obviously, I was in the office every single day. Then I started working from home. And then I would look up and be like, what the heck did I do all day? Because it was definitely a pivot.
I still do that.
Same.
Every day.
Same.
Every day.
So I time block a lot. And I think for me, it was creating efficient processes, because you can repeat those processes,
100%.
right? If I know I'm driving the transaction, so I'm driving, the coordinate and everything, the better I do that. And if I create one email draft that I can blast out, it's saving me so much time in the back end. So last year, what I really did was try to create efficient processes, which helped big time. But yeah, I mean, a lot of times people make it more complicated than it is, and that's a lot of my day is talking my team off the ledge. Like,
as my father would say, "Fuck up a 1-car funeral."
Yeah,
That's a good one.
That's a good one.
Yeah, that's what he says. It's famous Jimmy Ward term.
Yeah, so I think processes are huge for me.
Yeah. It's funny. I've spent so much time creating processes, and then I blow them up all the time too. You know what I mean? So like 6 months later, I'm like, scratch that. We got to do this instead. And like, I'm not so much like the shiny penny guy that I used to be a couple of years ago. I hopefully have grown out of that, but like, it's hard when like, I'm in this constant realm of re-improvement, and done is better than perfect.
Yeah. And I think you consistently have to reevaluate those processes, because the worst is old processes that no one wants to change. So reinventing those, how can I make it better? And reflection is huge.
Yeah.
Maybe focus on tweaking instead of blowing up.
Yeah. No.
Maybe the next time you get
nuke.
an urge, you can say, "Let's tweak a piece," instead of scrapping the whole thing and starting over. Nuke. Yeah, you're a nuker.
Yeah. Yeah.
Huh.
I do think though, we're trying to apply a retail trick I learned. Like, so if you guys don't know, I spent 16 years at Best Buy, regional sales management stuff.
They have good sales training there. I used to hire all my team from Best Buy.
Yeah, well, yes. I learned everything I know about sales from Best Buy, seriously. And obviously some self-learning in books, but like, yeah, incredible training. And something we used to do every year around the holidays is just like lock it up. We just tech freeze, right? So like, it came like if you tried to get something done and that involved corporate or a process, and it was like past September 15th, like it was like, cool, that's a great idea. Let's talk about it in February when the fiscal year starts, because we're going into game time and it's playoffs right now. And, we're going to do 70% of our business in the next 3 months. Let's lock it up. Let's just do what we do. Great. And I'll catch you next year. And very quickly, a lot of those things just fizzle the hell out, because they wouldn't have lasted. And it stops you from doing that shiny penny. So we just went through that here, and we are now in what is about to be playoffs, this hypothetical spring market. And we're trying to not change anything other than maybe refine a little bit. And hopefully that's better this year than it was last year. Yeah.
We'll say a prayer for you.
Thanks. I'll need it. Cool. I think we're getting to the end of it here. So, where can people find you?
Oh, before we answer that.
Oh, I'm sorry. Scratch that.
Where do you guys see commercial going in Boston in the next 2 years?
Multifamily bullish, right?
Very bullish.
Yeah,
Yeah.
bullish.
Office.
I think we'll see a lot of change with office. We'll see how we have to redefine it, especially when these leases start coming due.
Do you know when a lot of them come? I know that's an impossible question to answer, but like, are you guys like talking internally about a hypothetical pop of these leases, mass vacancies?
I think it's on. I think maybe above my pay grade. Yes. I think it'll start to trickle down, but I think they definitely. I think all banks right now are looking at that. When our portfolio, when are these leases starting to do? What are we going to do proactively for that?
Well, we're starting to see like San Francisco, which was big in tech. Everybody's dropping their leases, right? Like they're getting out of them, they're terminating early, they're going. So like, I would assume that if you have a ton of square footage in the downtown core currently, and you have a lot of your white collar workers still at home, like, you know, you could do hotel space, you know, much smaller footprints, right? Like you're still going to have an office, you're still going to, you know, but you're not going to have 5 floors, you might have 2 floors, right? So like, where does that swell go on the backside? Interesting stuff.
It'll be interesting to see.
So multifamily bull market on office, maybe some flux there.
And another factor that hasn't come to light in the office yet is the debt. So like a lot of those office buildings are going to have debt coming due the next year or two.
Yeah.
Like balloon debt or
Yeah,
Balloon
like
payments.
CMBS and agency type and life codes and, you know, those type of debt or swap rates, all that kind of stuff is start going to come in. They were probably written at 3%
and
Right.
now
6 years ago, and now they're heading 5.5, 6, and there's a cash flow, especially if you pull any office trailing 12, they're not going to look good. And there's only so long you can give that, you know, okay, we won't look at 2020, 2021, but you got to look at 2022, 2023.
Right.
So that's going to be interesting with the office. But like I said, like a lot of those landlords are very well capitalized. It's only a small minority they're going to be under pressure. But yeah, I'm bullish. Like I understand everyone, you know, being negative on the city about, you know, the administration and the cost of housing and
we have no official position on the administration.
officially.
No official position.
But, you know, the people really want to live in the city. And
Yeah.
that's evidenced by, we done a small little 2-family rental rehab in South Boston.
Crazy money.
The rents are crazy. Like 3 girls living in a 3-bedroom, 1 bath, paying $5,000. A small little 2-bed. The guy, it was basically a 1-bed plus office.
I'm sorry, I thought you said 5,000
Yeah,
a month.
yeah, no parking.
We
That's
just
not a quarter.
we just rented a 700 some odd square foot 2-bed for almost 4,000. Wow. No parking. No outdoor space.
Yeah,
That's great.
Great location.
I think too, it could bring it can bring more mom and pops to the city too, because they have negotiations. They can negotiate more. Like, so you have a bank moving out.
Yeah.
You might be able to get a better deal.
That was always my original opinion post-COVID is like all these restaurant closures, right? Now, if you're like a restaurateur right out of the city and you're killing it and, you know, Peabody or Danvers, Swampscott, like, let's go, man.
It's an opportunity.
This is my shot to take something in, not the North End, but whatever,
Yeah.
right? Like Back Bay.
Yeah.
You know, and
You can get a better deal.
anything's better than vacancy. Well,
Yeah.
usually.
gotta say the suburban restaurants really benefited out of COVID.
No doubt.
You know, like it's 2, 3, 4 years ago, like no one was working from home. You want to get lunch, you go to Panera. Now it's you got so much more choice. It's
They got great Mac, man.
I don't know. I like George's Prime.
Where's that?
Lewis Street and
It's a tiny little shack of a roast beef place that I used to go to when I was banged up at 4 a.m.
And it's called George's Roast Beef, but I think Prime sounds better.
Yeah.
But you look
Yeah.
at the amount of suburban restaurants that opened up North Shore the last 2 years. This is
It's a lot.
Crazy.
quality, high.
And they're all
quality
open for
restaurants.
lunch now. Like,
Yeah.
You gotta be.
we struggle. Like, you could only go to Hawthorne by the Sea for lunch before. Now
Yeah.
you can go anywhere. I go to lunch a lot.
Lunch, yeah, we know. lunch is very weird at Hawthorne by the Sea.
Well, it's about to get closed.
Is it?
Oh yeah, the town of Swampscott's buying it
To
Gonna
make it what?
a park
Oh, that's kind of cool.
in a bike lane.
I as someone who owns property in Swampscott, I hate that idea.
I
I
mean,
absolutely hate it.
let's not put an awesome hotel with a restaurant or an apartment building there that would be cool and utilize an awesome lot with great views. Let's
Yeah.
put a park.
What about a condo building paying $500,000 a year
Yeah.
in real estate taxes?
No, let's take that off the
let's-
tax
let's
roll.
Put a burden on this.
The taxes are so low there anyway. Like, let's just make them lower.
But yeah, you know, it benefits me because now I own property in a better town. Like
Yeah,
it
no
benefits all the residents, but you know, Swampscott's one of those towns where they say they're pro housing, but when it actually comes to housing, it's like, whoa, you know, like,
Wait till we show you the clip.
oh yeah,
Yeah.
what's that on?
The coyote clip.
Yeah.
Oh yeah, that's a good one. That's a good
That's
one.
you guys. Yeah.
Yeah.
Are you pro or against it?
I believe that
clip them.
zoning and like restrictive land use is horrible and the antithesis of what we're looking to do. And I think that the things that we're seeing in Swampscott, where, you know, they're trying to take eminent domain land to stop affordable housing projects, like all of that goes against everything that at the same time we say we're trying to achieve.
Like some of the factors of affordable housing I love.
Yeah.
I love the 40B is a great concept. It's a real,
What is that?
So 40B is a you'd know better than me, but it's a state.
It's a statute that says that if a town has less than a certain amount of housing that is at 60% AMI, that you can override zoning laws basically and build
Dense
housing and not go through the ZBA at the same
That's
level.
the town. That's the new statewide.
No, that's an old state law. That's yeah.
But it's a great program because
It
then you
is.
get these, you know, Wynn and Trinity and these type of big developers who they figured out the low income tax credits, all the type of different sources from HUD they can get, and they're the ones providing the housing. Versus, I'm not a big fan of the affordable housing on condos. I think affordable housing on apartments is great, but affordable housing on condos, you think you're helping people, but you're not.
No, we talked about this. Now developers build less because they don't want to hit the minimum. They don't want to break into affordable housing, so they build less units. And then if and when someone does build the appropriate amount of units and triggers affordable housing, they have to charge more or build at a premium to offset the cost of affordable housing. It's like, so now you're actually increasing the lack of affordability of housing to a degree. That's my opinion.
And even the flip side of that, like the one person no one's talking about is the end user. So that person who's buying that condo for 250, 280,000,
Never going to get equity.
you're just keeping them in poverty.
Yeah.
That's all you're doing.
I
Absolutely.
completely agree.
Most generational
100%
wealth,
agree.
most generational wealth is going to be created through appreciation of real
Yeah,
estate.
absolutely.
100%.
So
you're
let's make
saying
it easier to build and less expensive to build, and the housing will be less
So you
expensive.
buy a condo for 250 and in 10 years time you sell it for 260. It's
Yeah,
like
it's sick.
It's,
When it's really worth 510 or 550.
Yeah.
right. You're not really helping people. So like
Nah, I
help them
agree,
through
man.
different programs. You know, the state have that Dreams loan, or is that
Or
state or federal?
It was
that
Mass
was
Streams, and they're out of cash.
Grape's
I think
gone.
already.
Oh, they're
Yeah.
gone.
Yeah,
the cash
that
went
was
Great-
gone.
Great program.
Real quick.
Yeah,
Yeah.
like
That was
end
a
of
great
November.
program. I
Yeah.
agree.
Yeah. You know what's shit, I just had a really good thought and I lost it already. Oh, I know what it was. We can just edit that part out. It'll look like I'm really smart.
Welcome back, thought.
The real quick question. Would you have bought a house if there was no upside in appreciation?
Oh yeah.
You still would have?
Yeah,
a house as
probably.
in a home.
Yeah.
Yeah.
You
You,
still
gotta,
would've?
you gotta live somewhere. Yeah.
But if there's no upside in appreciation, what's the difference?
It's roots. It's you know, secure tenancy. It's
I think it gives me pause on what I would do.
I
Is
don't.
that weird? Is that weird?
Maybe a little. I don't think that wasn't a factor at the time. I mean, now I think a little differently about it. But
yeah.
I mean, we wanted our own space. We wanted it to look the way that we wanted to. We wanted to be able to do what we wanted to.
you want to knock down a wall. You want
Right.
a kitchen. Yeah.
Swanky wallpaper.
Swanky wallpaper, all the things.
All the things.
All the things.
But that is changing. You know, it's 15, 20 years ago, people were getting married in the 25, 28, buying the house with the white picket fence in 30, 31. Now they're pushing that into their 40s. They're having,
doubt.
they're having
Yeah.
kids in the city. You go around South Boston, especially on the east side, around Medal of Honor Park. There's as many families as if you go to Swampscott, Marblehead, and Hand. It's a really family friendly part of the city. So yeah, that dynamic is changing. But at the same time, I don't know what you guys are seeing on prices, but single family prices in North Shore are holding pretty firm.
Yeah. There's no inventory.
Yeah.
There's no inventory. There's actually a fun stat. If you look at all the homes for sale in Massachusetts, single family, a couple weeks before Christmas, I don't remember the number, but it was like, I don't know, 2,800 or 2,700. It's not a lot of homes for sale. Historically, that's just in general, no matter what time of year. Or sorry, it was like 3,700. There's just not a lot of homes. Like years ago, it was like 9,000. Okay. And for the last several years, it's been sub 4, sometimes sub 2, sometimes sub 1,000 homes in all of MLS PIN in Massachusetts. Okay. And obviously the Cape is a little bit different. They use a different MLS, whatever.
What you're seeing homeowners doing now too is they're putting more money into their house than their house is going to be worth because, okay, I need to upsize, I need to do whatever, but I'm at a 2.5% rate.
What's the difference?
If I put a 50 grand kitchen in, my value goes up by 10, but I get to keep my house. So people are doing those type of improvements. I don't think people are going to be moving.
Yeah.
Like that whole, not to shit on real estate agents, but this whole like,
please do.
Let's do it.
Buy the house, marry the rate.
Oh, I never said that. Don't worry about it. That's stupid.
Like, what's wrong with that?
I'm married to 2.8%. Like we're not going anywhere. You know what I mean? Like it's
a sales tactic, man.
Are you married to the house or the rate?
Married to both.
Yeah. Well, what if the rate? What if that house came on the market today that you love and you just put all that work into and you guys love that house and it's a great house?
That's the flip side. I could afford it, but my monthly payments would be a lot more.
Right, but would you fall in love with the house and get rid of the rate as it went down?
Right, but
why you gotta hate, man?
Well, here's the thing. I think here's the deal.
I love to hate, by the way.
So I never said that, and I thought it was a quirky marketing tactic. And for a minute, I was like, oh, that's a good idea. I'll do it. And then like it went viral, and like I was like, I'm definitely not posting it now. But the reality is, like, I went on record with a couple friends, realtors, other clients in January of last year, and they said, what do you think is going to happen with mortgage rates this year? I said, there's no way we hit 5%. There's no way. Okay, and saying that when we were a 3.25, you probably would have agreed with me.
Agree, yeah.
Right? And shit, was I wrong? 7.5, here we come, right? And that happened real fast, okay?
That was with a points buy down, 7.5.
Yeah, like, so the reality is I thought I knew, okay, is my point, and I didn't know. And so saying something like that, like, dude, none of us freaking know.
No one knows.
I have no idea what the Fed's going to do. I have no idea what mortgage-backed security is going to do. I have no idea what's going to happen today with the debt ceiling. Like, we could go to 9% unemployment in a minute, and you could see the world crumble for the better part of 2 weeks. I have no idea. And do you think mortgage rates are going to stay steady during that? Hell no. Right? So at the end of the day,
so do you want to marry the rate or
no, man? You got to buy. You have to settle into
what you feel comfortable.
What you feel comfortable with, and you better be good with it for an extended period of time, because there is nothing saying rates could come down. Will they? I think so. Will we settle in the mid 5s? I think so. But they also could go to 8 in 2.5 weeks from now, or with the next inflation report, they could skyrocket and be right back to 7.5. And so for the people that did 2-1 buy downs, although a good product, and they did qualify them at the higher rate, to be clear, like, people,
assuming they still have their job in 2 years.
Yeah, but we could be, if you say that, you could really be setting people up to get screwed.
Yeah.
Agreed.
You know, and so you got to make sure that you're comfortable settling into that for years on end. And listen, if it comes down, let's hope the LO's great and gives them a buzz and saves them some cash.
Yeah.
The flip side of that too is we're looking at a pure black and white, pure numbers. Like, oh, this is it. Life happens. Like, people get married, people have kids, people need to move, people need to buy, and the way the rental market is, you try around a single family house, it's impossible.
It's a ton of money.
Yeah, ton of money. So yeah, you might be better off just, buying at the 6%. So like it's there's that emotive factor too, that it is what it is.
I agree.
We're seeing good signs on commercial. Like you were saying about FHLB earlier, like that index has been going down since Thanksgiving. Was 4.6, now is 3.8. 10-year Treasury is down to 3.4 today. There was a while it was looking like it was 80, 90 bips over that, and it was trending towards 100 bips over. So if we can stay around where we are, I think we'll do pretty well this year. If like you're saying, that 5.5% range is a nice range for us to play in.
But we still hate date the rate, marry the house.
I don't like it.
All right.
Like it.
It's a marketing.
It's dead to us.
It's a marketing
It's
tactic.
too catchy.
All right.
I think that if you don't know if it's going to change, so if you can't put
Correct.
it in its current position, you got to reevaluate it.
Yeah.
We need
You
an
got
8
to
ball.
rethink. Yeah.
Magic 8.
I thought-
No, the other kind. The Magic 8 ball.
I don't know. You told me about those coasters you had. I don't know. So, all right, listen. So Brendan likes to ask everybody the question, so I'll let him ask it.
Oh, you can ask it. I always ask it.
Okay. So I'll probably screw it up. So we like to just close out the podcast. Thank you guys for coming on today. You guys were awesome. We went way longer than normal because it was just great conversation. And I think we confirmed maybe some suspicion in commercial, but also I feel kind of strangely more comfortable coming out of this as well, right? So,
And I learned a ton.
yeah, super.
Cash on cash. I learned all sorts of new
Debt
terms.
constant. I'm going to need that formula. I'm going to need
Yeah.
that spreadsheet, Brian. So,
Yeah.
so the podcast is called The Word. So if you could just look at 2023 and you had to pick one word to kind of indicate what you're shooting for this year or something that you've learned in the past year, kind of just to think when you're thinking about your business as a commercial loan officer, what would be your word in 2023?
I would say mine's intention, to do stuff with more intention.
I think someone else said that too.
I think so too.
Yeah, that's
It's
good.
a great word.
I think it comes down to some of the prospecting stuff, right? Like, I'll tell you right now, if I could have 2021 all over again, I think I would do a lot of stuff different, and I bet you I could do 2 to 3x the business and help way more clients. So, cool word. Appreciate it.
Thanks.
Mine's rescue.
Oh,
so
Tell
me more.
us. Tell us.
Like I said, like we do debt, but
I actually could use some rescuing personally.
so
I
we
think
do
all of
debt.
us
but
can.
Let's have that offline discussion.
we also do a lot of equity and mezz and some pref equity. So a lot of the deals that were underwritten a year or two ago might not pencil out in practice, and those deals need rescue capital. And everyone knows what I do, like, so I don't need to go out here and tell people that I'll do your refi or whatever, like, but it's that condo conversion that didn't go great and needs to get converted to rentals, or half of them sold and now you've got a broken, busted condo deal, you own 4 out of 8, or you're just underwater and you need to, you can't sell your property right now because you made construction, maybe you need a partner, maybe you need mezz, maybe you need, someone to buy in. So we've already started doing a few of them, and like you were saying earlier, creative, but I do think rescue capital is going to be key this year.
That's cool. I could have we could spend another 20 minutes on some of the equity stuff, but I guess we'll save it for
We'll come back.
when they come back.
Part 2.
Another episode. Cool. Well, we appreciate having you guys on. How can the listeners find you, Brian?
So we've website financeboston.com. You'll find all of 8 of us here in Boston, or I've got my own work Instagram page at Brian Rooney _FB.
I hope I follow that.
I think we do.
All right, I better.
you do.
I better. I'm going to if I don't.
Cool. Adriana?
You can find me on Instagram. It's a Moschella commercial lender. And contact me through there.
I'm not going to ask you how to spell that, but I think I could find it in a search.
Moschella.
All right, cool. Awesome. We appreciate having you guys on. Peace.
Thanks.
Yeah,
Thanks,
thank you.
guys.
Peace.